Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Wednesday, August the 19th. Happy birthday to my beautiful baby girl. She's not a baby anymore, but she'll always be my baby. And welcome, everybody. If you're here this morning, I just want to say thank you for joining. Drop your name in the chat. Let me know that you're here. If you have questions or comments, this is the place. I'm here to help traders of all levels. I've been doing this for 20 years plus. I'm a Series 7 licensed stockbroker. So this is what I do for a living. I'm a day trader. I'm a scalper. And this is what I do all day, every day. So if you want to follow and learn from someone who is a professional trader, this is the place to be. And it's free, guys. So can't beat that. Am I right? Okay. Elisa is here. Good morning. Good to see you. And we're going to start by just kind of seeing what we're doing today, what we've been doing, what's going on. So let's jump right into these charts here. Get over to my chart. All right, there we go. So let's zoom out a bit here and we'll take a peek at what this market is doing today. Mark is here. Good morning. Welcome. All right, so if you take a look, I'm going to zoom out to the 5 minutes so that we can kind of get an overview of what happened last night as well. All right, here's our 5-minute chart. And if we zoom way out, in fact, we can see this hippity hoppity nature. Can I get the whole thing on my screen? Close. I think that's good enough. So we can see this is the 12th. That was last week. We had sideways, a move up. And during the day, we had this little cute reversal and then another move up. So you can see when you zoom out, you can really see the games they play, right? But so here's the 12th, here's the 13th. This is Thursday. That was where we hit the all-time high. That was that pop there to the all-time high. Then it retraced, pulled sideways. We have not yet recaptured the all-time high. We're just playing. They're playing with us. Then we got a little retracement here on Friday, pulled back from that all-time high. And then over the weekend, we had this pull up and a pull down right into a dump on Monday, right? Dumped Monday, dumped all night Monday night, dumped Tuesday, dumped most of the night last night, and then gave us this push about midway through the night. Somewhere around 2 a.m., we got a reversal, and it's been pushing. So these are just the shenanigans that we're getting. And it's really important to zoom out once in a while and take a look at where we've been to get some idea of where we might be going. Now, we can't predict the markets. It's impossible. The markets are random. But we can try our best to get a feel for what is going on. Let's zoom in back on our 1 minute. So now you see where we've been. We hit the high and then we pulled back, and now we're trying to climb again. We did hit a high of day today. Am I on the 1 minute? Yes, I am. We did hit a high of day today at, let's zoom in here a bit. 772.4 is the high on the SPY. We are sitting at 77.36. So yesterday they tried really hard to save 7,700. That was something that you could see the market doing all day long, trying to save 7,700. At the end of the day, they gave up the ghost. It dropped down. We closed below 7,700, but never fear, we gapped right back up over it this morning. All right. Good morning, Maria. Good morning, Craig. Thanks for saying hi, you guys. You know how much I appreciate that. Okay. Gapped back over it, back up over 7,700, sitting currently at 77.36. Now remember, 77, well, I'm going to tell you to remember, and I don't remember. 77.26, I want to say. 78.26 is the high. Let me double check that before I speak and say something that's not true. Well, I can't see it on this chart, can I? Give me a second. Let's look at our daily. We might as well look at our daily anyway. Let's get that analysis done. All right. This is the SPX chart on the daily. Remember, the only difference between SPX and SPY is that SPX, or otherwise known as the S&P 500, that's the index. The SPY is the ETF built over the index so that you can actually buy. So some people, you'll hear people say things like, hey, just put your money in the S&P 500 and let it sit there. That's not bad advice. The S&P 500 has gone up consistently, really since its inception. So not bad advice, but how do you do that? How do you go just put your money in the index? Well, you do it through the SPY. You cannot own the S&P 500 itself because it's an index. You can trade options on it, but you can't own it. So what did they do? They created the SPY. It's worth 1/10 of the value of the SPX. So roughly, right? That's a rough estimation, but usually the SPY is about 1/10 of the value. So it's cheaper. You can buy one share right now for about $770 something per share. And that's how you own the SPX. But here, what we do is day trade it. We don't own it, we day trade it. So on the daily, you can see that we hit the high at 78. I said 26, it's actually 16. Getting my decimal mixed up in my head. 78.16 is where we hit the all-time high. And then what did we do? We immediately reversed off of it. Now, did we go too far? No, not really. This little area of chop that has been nothing but consternation for us for about 2 weeks now. I've had a couple of losing days in through here just because of the nature of this herky-jerky market. Tiny candles, up and down, no direction. You can't tell from one day to the other where we're going. Very hard. So last week caused me last week and the week before had a couple of down days, and that's been challenging. But actually today we're up nicely. We took 3 winning trades on the first stream, and I took another winning trade before I started this stream, which I apologize. I was running late trying to manage that trade before I could start here, but we're in good shape on our account. So again, we've got this dip below. So you can see it right here. I have a line drawn at 7,700. They really tried to hold it yesterday. You can see the candle is little, but it is a dropping candle. So we gapped down and then did another drop intraday. So this is negative. These 3 days are negative. But then, so they pushed all day to hold this 7,700, finally gave up the ghost, closed below it. Never fear, bulls to the rescue, a gap up over 7,700. And look where we dropped to. Do you see this wick? Let me zoom in for you. Sometimes it's hard to see the charts on the stream. Let's zoom in a bit. This will be a little easier to see. Okay, yesterday's candle, tried to hold, lost it. Today's candle gapped up over, pushed pretty nicely, filled the gap from Monday. So this was the gap. See it? Straight down. That's the gap. This candle, the wick came up, and look at how these gaps are respected, guys. What's the low on Monday? The low is 7744. What's today's high? 7743.9. That's a gap fill. Now, I don't personally love gap fills with the wick. I want to see the body of the candle because that tells me the price action is serious. A wick is nothing more than a wisp of smoke, in my opinion. The body of the candle tells the true story. So we wicked up today, filled the gap from Monday. So that's this to this, Monday to Tuesday gap. We filled it and then reacted, came down. Once we filled that gap, we came back down, jumped up over 7,700 at the open and held it. That is the key. However, look what we did. We dipped down today, and where did we stop? Right there, 7,700. These levels matter. So that's why it's important to back out, to get a bird's eye view, to watch your levels. They matter. Gaps matter. Support levels matter. Highs and lows of previous days matter. All of these things matter. David Neely is here. Hello, David. So that's where we are, stuck between the devil and the deep blue sea. Stuck between Monday and Tuesday. We're sitting right here, right in between them. And what is that? Nothing but chop. Right through these two lines, this is the chop zone. So that's where we've been, that's where we are, and there's no moving from that right now. What we did see as of yesterday was this nice roundover. We talked about it. We said, could we continue on down? Absolutely. Could they put it back in the range? Absolutely. Could they turn and give us a new all-time high? Absolutely. But what we do have coming this week, end of this week, is OPEX. That's the options expiration. We can see moves before OPEX, sometimes the day before, sometimes the day of. Sometimes we see repositioning in the days after. So Friday will be OPEX. We'll watch tomorrow and see if we get some pre-OPEX moves. Options expiration, meaning that there are daily, weekly, monthly, quarterly, and then other options for leaps. But these are the big ones: daily, weekly, monthly, quarterly. All of those options have their own expiration. Big money does not get into the daily options like we do. They can't turn their Carnival cruise ship that fast. We have a catamaran. We can turn on a dime. They have a Carnival cruise ship. We're actually probably Norwegian because they've got money. So they can't turn that big ship the way we can. So they're not going to get into daily expirations. They're going to get into monthlies and quarterlies. That's usually how big money works, hedge funds, that sort of thing. So when we get to the end of those expirations, the monthlies, the quarterlies, you start to see position jockeying. They start to move around a bit. They start closing this position, opening this position. And that's where you start to see the market move. You start to see this response to money coming in and out of the market at different levels. So we do see that. We see it, like I said, sometimes the day before, sometimes the day of, sometimes after. So that is what we've got coming up. And I think it's very possible that we start moving into a pullback. Now, I am not calling for the sky to fall. I think we're going to hold our own until midterms are over. But that doesn't mean we can't get a nice fat 10% drawdown between now and then before they push it back up. That's 700 points would be a 10% drawdown on the SPX. That is not a big deal for these guys. You see it, right? Zoom out. Let's zoom out again. And you see these moves. We went from 7,300 to 7,800. 500 points we moved in, what, 2 weeks? And they can certainly do it faster. So 7,300 to 7,700, 400 points in 5 days. So can we move 700 points in a heartbeat? Yes, it's not a big deal. People are going to see this correction if it comes, if it materializes. They're going to see it and they're going to say, the sky is falling, because that's going to put us down in this zone. If we see a 10% correction, I think we will, but we don't have to. We're not going to trade on that. But I think that's the big picture. We'll see a correction before we get another push at midterms. 70, let's put us at right here, right in here. Okay, so this level right here is where I think we could get to. That's a 10% pullback. Pretty easy to do. And how long has it been since we've been there? Well, April. So, you know, it took us 5 months to travel this distance. They could bring it down there in 3 days, right? It wouldn't be 3 days, but it could be. They can bring that down there in a week, right? And pull it right back up in a week. You've seen it. Look at this. Look at these V-shaped reversals. How many hundreds of points did we travel in a couple of weeks? So many. So just be aware of that. It feels like when we go into these types of pullbacks, and let's discuss that. A pullback is defined as 10% from the all-time high or less. 10% or less from the all-time high. So anywhere between 76, 78.16 on down, if we start moving down, is considered a pullback until we get to 10%. So roughly 7,000, 7,100, somewhere in there. That's a pullback. That is normal, common. We see it once or twice a year. Very common, very natural, very healthy. Correction is defined as 10% to 20% drawdown from all-time highs. So if we get below 7,000 on this pullback, if it comes, we will call that a correction. We'll be in correction territory. When we get 20% or below from the all-time highs, measured from the all-time high, which would put us at about 1,500 points below where we are. So roughly 6,300 on the SPX. 6,300, just for reference, 6,300 would put us right in this area. This low that we had in April, 20%, not correction, 20% puts us in bear territory. That is how we define a bear market. 20% from the all-time high to where we are, 20% is classified as a bear market. So we would have to drop all the way back down here to where we were in March and April before we would be in a bear market. But these 10% pullbacks are normal and common. We do see them. We do expect them. I do expect it. And so that could happen, like I said, before midterms. Doesn't have to. But I think after midterms, here's the thing. I think we're in an AI bubble. I think the cracks are starting to show. I think there's an awful lot of hocus pocus and circular financing going on. And I think semis are going to blow the lid off of it. I think that's how it plays out. Doesn't have to. But I think we are in a bubble. I think a big, much bigger correction or bear market is coming. However, they may try to hold this thing together with smoke and mirrors until after midterms, maybe even after the end of the year, because don't forget, we have Anthropic and OpenAI both trying to bring their IPOs to the market. These guys are at the core of this circular financing that NVIDIA is using, that all the big guys, they're all, hey, we'll pay you, you pay us. That's how this financing is going. And these aren't even profitable companies yet. They're not profitable yet. However, they're at the core of this huge financing circular bubble. So I think that we're going to hold this market together maybe through the end of 2027, or maybe after midterms, they light the match and let it burn. I don't know. But I think 2027, we need to buckle up for. All right. David's got a question. Love to see it drop back down and touch the 769 again today on the SPY. It's possible, David, we could come back down and do that because we do have a gap that could get filled. We just looked at it. Let's look at today's gap again. We never did fill the gap. We came close, but we never quite filled it. So actually, let me take that back. We did fill it with the wick. So let's see. Let's see here. Remember, the gap is defined as the close of the previous candle to the open. No, we didn't fill it. To the open of the current candle. Now that I'm zooming in, we did not fill it. So we got close. We got that lower wick coming down, almost filled it. So where's the close of yesterday? Close of yesterday is at 76.91 on the SPX, and we got as low as 7,700. They held it to the tick. But I do think we could see a gap fill. It's possible. Right now, they're not doing it. We're kind of green candle. But let me show you what that looks like on the SPY, David. You'll see the gap on the SPY. Come back. All right. Here is our SPY chart with our multitude of rainbow lines. Here is yesterday's candle. The low was at 766.9, basically 767. Sorry, let me say that right. 767 is where we closed. Okay, so we've got to get down to 767 to fill that gap. We got as low as 768. We got real close, but we got to come all the way. And in fact, I put a line here, right there, that little red line. That is our gap fill. That's what I put right there. So, you know, could we come back down and fill the gap? Yes, we are up about 34 points. So this is not a mad, crazy, bullish candle. It is bullish. We do have a gap up. We do have a green body, but it's not a mad, crazy candle. We're only up 34 points. It's okay. It's just okay. It basically just puts us right back into chopped territory, which is where we've been all throughout this space of time. August 4th, kind of when we entered into chop, and we've kind of been there ever since. All right, so let's get back to our minute chart and see if we've got any interesting plays going on here. Now that we got the big picture analysis under our belt. Moving so consistently downward from our high at 772. We've been really consistently moving downward. And this line I've kept on my chart right here. It was a pre-market ghost wick that we've hit a couple of times, but the reason I've kept it is just because it really seems to be getting some attention. Price seems to be coming back to this level many times. All right, there's a drop. Let's zoom out and see what the Qs look like. Qs were red today, and they have turned and pushed upward. So you can see the Qs were really dropping this morning. That chart looked a little bit different than the SPY. So let's zoom out on the SPY, and we'll look at it side by side. So the SPY did give us a bit of a drop, but not like the Qs. The Qs just said whoosh, right? The SPY also did come down, but reversed sooner, stayed range bound for a long time, while the Qs just went straight down and then recovered. So now the Qs are also kind of making this, what are we doing pattern here, while the SPY is also making a what are we doing pattern. Looks like we're coming down, but it's been slow and steady. We have not broken the VWAP yet on either the Qs or the SPY, so I would watch for that on a drop. We're sitting at 770 right now after hitting 772. So we've come down a good bit, 20 points at least. And I personally would not trade a put here because number one, I already did. And number two, we are, we've been dropping consistently for quite a while. So I'm not going to trade that again. I don't like to do that. I don't like to trade the same move twice. Sometimes I will, but it's not my favorite thing. I like to trade each move one time. So this move has been going on for just a little bit too long for me to trade it. However, we are pushing toward the VWAP. So if we do get a break of the VWAP, I might consider a downward trade, although I will say this has been pretty extended. We've been pushing down since about 11 Eastern. Okay. MACD is kind of like, not super strong right now. The VIX is sitting at 15.2. So down about 4% after a nice pop yesterday and the day before. It's pulled back just a little bit. 15.2. Pretty complacent still. The VIX is pretty complacent still. All right, still pushing down. There we go. Here's a test of the VWAP. Zoom in a bit. Not too far from your 769 level there, David. Hopefully that helps you. Sitting at 770. We'll take a quick look at our gamma. We're in positive net gamma, but we're fairly close. 3.3 billion in puts, 4.3 billion in calls, for a positive net gamma of roughly 1,997,000,000. Our put wall is sitting at 768, but we've got a lot more interest at the call wall 772, which we already hit. We've already hit that call wall. However, we could pull back up towards it. 500 million sitting at 772 and only negative 210 million sitting at 768, but we've got another 200 million sitting at 767. So roughly 400 to 500 on the two combined strikes. 767, 768 combined are pretty close to our 772 call wall, if that makes sense. All right, David says that would be break even. Nothing wrong with break even. I will take a break even any day, especially if you've been holding a losing trade for quite a while and it's a 0 DTE trade. Take the break even. If you've been holding it for more than 30 minutes, take the break even. That's my advice. Okay. Just sitting here. We are currently testing. Good advice. I did a study once, David, that said that majority of losses are going to happen after the 30-minute mark. In other words, if it has not gone in your direction in 30 minutes, chances are pretty good it's not going to. So the odds, I think the odds are about 50-50 at that point, based on the study I did. If it hasn't gone in your direction in 30 minutes, the odds are about 50-50 that it's going to recover. Those are, to me, those aren't good odds. So if you see a break even at 30-minute mark or more, I say take it. That's my advice. All right, VWAP test right here. MACD getting a little brighter on us. Coming down to about 27 points for the gap fill. That's still a good ways below us. That would put us just below 7,700, which is their line that they've been defending. Not a lot of strength in the upward move today. All right, there's our test. Let's see what we get. If we break down through it, do we want to consider a put? I don't know, because of how long it's been moving downward. I usually am cautious of any move that's been going this amount of time. All right, let's check our leaderboard. The semis, like I said, have been giving us leadership. Semis are back up today after a drop yesterday. But the semis, last time I checked, they were looking like, even though they had this major gap up, they were looking like they were pulling back down again. Marvell was up at one point over 12% and is now up 7%. Still impressive, but a decent pullback from where it was. Mr. Paul Fair, good morning. Welcome. Okay. So I do want to take a look at the minute charts on SMH. Actually, let's look at Marvell first, because it's been kind of an interesting morning. So nice gap up, right? You can see it overnight, really pushed up right here at about 8. Interesting. That was the same time that the SPY started pushing up this morning, roughly 8:30 Eastern, right in here. Marvell did. I wonder if there was some news in the chip world. Anyway, big push, big gap up, and immediately pulled down after the open and has since been stuck sideways. So like I said, still a good gain, 7% right now, very good gain. But definitely a bit of a rejection off of that high that it hit here in the pre-market. Tesla's really screaming today, 3% up. SK Hynix up 2 point something. Where is Micron? All right, little recovery of the VWAP here, just a tiny one. Where is Micron? There it is. Micron is red today. That's interesting. SanDisk red today. That's interesting. So we're getting a little mixed result here. Let's take a look at the semiconductor ETF. We'll look at SMH, also SOX. Yeah, same chart. Push in the pre-market, immediate drop at the open, and then a sideways recovery. Interesting, though, that SMH as a whole is down 1.2%. That's probably due to Micron and those guys pulling it down. Let's take a look at SOX. We are getting a little pushback here on the VWAP, so I'm watching this. If we get a pop here, we might consider a call. All right, SOX looking the same. What's going on with our pre-market there? That's odd. Unless not. Okay. Same thing with SOX. Straight down after the open, sideways since, and negative 1.7%. So that's interesting. So who is pushing up? Well, it's the MAGs. So remember, MAGs is the ETF over the 7 top tech stocks: Apple, Amazon, Microsoft, Meta, Nvidia, Tesla, Google. Those are the big guys, the big guns. And this ETF here, MAGs, this one tracks the whole movement of all 7 of them. And look at the MAGs today. Strong performance. So semis moving down, MAGs moving up. This has been interesting. I've been seeing this lately, where they're kind of taking turns, where MAGs will move up, semis will move down, semis will move up, MAGs will move down. It's very interesting. You'd think the relationship would be a little closer. But I've been watching semis for leadership in the market, because that's where we're starting to see the cracks in the AI bubble. So just keep that in mind. All right. Still pushing here. We've got a green MACD. We could consider calls here. I'm going to look at the 770 calls for today's. I'm not in them just yet. I'm kind of just watching this move here. It's sitting kind of still for the moment. And I like to watch the cues at the same time. Sometimes you'll see the cues move before. Sometimes they lead. Sometimes the SPY leads. But I like to watch how they interact with each other. Most of the time, you'll see the cues and the SPY move pretty much in unison. Sometimes they diverge. But if they are diverging, a lot of times it's the cues that are providing that leadership. So that just sometimes gives me another little 1 or 2 or 3 second advantage. All right. We do need to look at the VIX on the daily because that gave us a little change. Remember, we talked about the VIX popping up Monday and Tuesday with those big gaps. And I said, what did I say yesterday? A lot of air on that chart. It's a house of cards. When you see gap after gap, large gap after large gap, the market doesn't like that. It wants to return and build structure. So that is something I mentioned yesterday on the VIX chart, on the daily VIX chart with those 2 gaps in a row, that we might come back and do a little structural fill-in, a little brick and mortar there. All right. This move is not impressing me. The volume is coming down. There's not a lot of strength. I don't know that I want calls here. Not seeing strength. Let's watch for a minute. It is a bounce. It is a bounce off the VWAP. So I like that. I like what the cues are doing. VIX giving us a little move down here. Nick, I was just thinking about you. I haven't seen Nick in a hot minute. All right, popping in to say hi. Been busy. Anything interesting happening? Well, welcome back. I've taken a few good trades this morning. Nothing yet so far on this stream. And what's interesting? Well, we popped back up and recovered 7,700 on the SPX. They tried real hard to hang on to that yesterday. Gave up the ghost at the end of the day, and then sure enough, opened us up with a nice gap up, not huge, just enough to recover 7,700. And that's where we've been sitting today. Ran it up here and then started pulling it down. So see how that move petered out here? What did we just say? The volume was descending. It didn't look super strong. It wasn't going anywhere. There's a little fake out there, a little fake bounce off of the VWAP. That would have given us a fake out. That MACD turn right there was a fake, at least for now. All right. Nothing to do here but watch. Little volume bar building on this candle. So if we start pushing back up on volume, we could go back and consider that call again. Right now, I'm going to pivot and load a put at 771, today's expiration. We'll look for a break of the VWAP, but it's going to need to be a convincing break, not this. This is just a little fake out. Had 30 minutes per day to trade the past 2 weeks and have been hitting 755, 825 window with 1 or 2 good trades per day. Excellent, Nick. Excellent. Glad to hear you're winning. All right, David. How I know where the VWAP is, Mel. Great question, David. I'm pretty sure you have Thinkorswim. It's a study on your study list. Yeah, no, I knew what you meant. I knew you forgot the do there. It's a study on your list. Let me look at it real quick. I'm watching this VWAP here. So, but basically on Thinkorswim, you're going to come up to the beaker up here, this little beaker thingy. You'll click on it. This is going to give you a picture of what studies you actively have loaded on your chart. And this here is your list of choices. Here's your search bar. And you just type in VWAP on your search bar. If you could type, like, there you go. And you've got some options. Actually, a lot of these are my custom indicators, but the ones that are Thinkorswim have the little question mark. The VWAP and the anchored VWAP, those are Thinkorswim indicators. The rest of these are just custom ones that I've played around with. And right there, you'll just click on it, hit add selected, and it's going to show up on this side. I use the VWAP as is. I don't change any of the settings other than the colors. I like the VWAP itself to be a little bit thicker line. And then I have the outer bands. And actually, in this case, I don't even have them printed. But if I do print them, I'll make them thinner in the same color. So that's how you do that, David. And great question, by the way. Anybody on Thinkorswim, these charts can be challenging. It's got so many bells and whistles. All right, here's a nice break. My new indicator likes to scream at me, and I haven't quite figured out how to fix that yet. It's actually, I mean, I know how to fix it, but it's got several different things that it's alerting me to, and that's why it's like ding, 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 ding. Super annoying. All right. Like church bells. Sort of. Church bells sound prettier than that. Those are like clanging railroad chimes. All right, we're dropping. I like the puts here. We're dropping the VWAP. See how that volume bar gave us a turn? You never really know which way we're going when you see a volume bar. What you do want is to pay attention. When you see a volume bar, pay attention. It means that orders are getting loaded. You don't know what direction, but you do know there's interest at this minute. In this minute, there's interest. Okay, not dropping yet. I'm not in the put yet. It's still kind of playing right here at the VWAP. Qs have not broken their VWAP yet, so that's another clue. We'll watch for that. AMD down, SpaceX down, SanDisk down. So it is the semis today that are kind of responsible for pulling us down. But it's a mixed bag because SK Hynix is up there. Marvell is up there. So it's a mixed bag a bit today. All right, here's another little drop. I'm watching. It would be good to see the Qs drop below their VWAP. That would give me a little bit more confirmation that we're going down, but the Qs are not really losing their VWAP here. Both of these high volume bars were sells. This one was a sell. This one was a little sell. We haven't decided yet which way it's really going. But right now it looks like a little sell. Bitmine losing its mind this morning. 13% elevated. What happened to Bitcoin? Remember, Bitmine is the ETF over Ethereum, the crypto product. And Ethereum runs really neck and neck with Bitcoin, just not as large, a much smaller version of Bitcoin, dollar-wise. Bitcoin up today 6%. That explains it. Bitmine losing its mind. All right, looking at a VWAP. That's what that little dinging was. It's telling me we've got some VWAP interest here. Bitcoin at 68. Good to see it given a nice push for a change. I'm pretty pro crypto in the long term. It's been doing nothing much for the last several months. It dropped hard from its highs, dropped all the way down into the 50s from, what was it, over 100? Dropped all the way down into the 50s and has really done not much since then. But I am a long-term bull on Bitcoin. All right, little push here. So the Qs have kind of told us, no, we're not breaking the VWAP. So that's also keeping me just a bit cautious about puts here, just because the Qs are not really confirming it right now. This is looking like a buy, potentially. The MACD is warming up. We're getting a push off of the VWAP again. It's a potential buy. Calls, that is. Dan, good morning. Good to see you. Dan, we have like 1 minute. Maybe you've been here and you just decided to say good morning. I'm going to sign off here in just a minute. Let's do a quick check on the volume before we do that. Bought the VWAP bounce. Okay, good luck to you. I think we might move up some more. We'll see. Looks like it wants to. Qs never did confirm the VWAP break, so that kind of told us, well, watch out. Don't necessarily short here. Let's look real quick at the volume, and then we'll give our kind of analysis and plan for the day, and then we'll sign off. Right now, volume sitting at the call side, just barely. 771 level has the highest volume on calls. Put side just behind it at 769. So that is telling us we could be in for a bit of chop. Let's go down to today's stats. Put call ratio is just slightly skewed to the put side, 1.1. Looking at 2.49 million in puts compared to 2.22 million in calls. So slightly skewed to the put side, but nice bounce here. All right. We could potentially trade this bounce. Watch this recent top right here and see if it breaks. We could trade that bounce. And Dan, if you're long calls, you might want to consider taking smaller wins on this move, just because it may or may not come all the way back up here. It may or may not. We've got pretty evenly balanced volume on both sides of the fence today. Puts and calls pretty evenly balanced, a little bit heavier skew to the put side, just a little bit. Monitoring trades. Good, good. There's your push, Dan. All right. So yeah, I actually might take this call trade here since we just beat this recent high, but I'm not going to do it on the stream just because we're at the end. I don't want to leave you guys hanging in the middle of a trade, but I might take a call here, very quick one. Like I just said to Dan, I don't think I'd stay in very long. I don't think there's any guarantee that we'll run back up here. So I'd be careful with it. I don't feel a ton of strength in the market this morning. It just doesn't feel super strong. That doesn't mean that it won't. Doesn't mean we can't just charge up again, but it doesn't feel super strong to me right now. So any trade that I take to the upside would be short and sweet. All right, guys, that is going to do it for me today. I so much appreciate you guys jumping in here, saying hello, and we will be back again tomorrow at 11 a.m. Eastern. Thank you guys so much, and we'll see you tomorrow. Bye for now.